How's it, guys? I'm Joe from the Crypto Cartel, and welcome to my final video on price action. And today we're just going to be discussing Fibonacci retracements and Fibonacci extensions, so that you guys kind of see how I look at taking profits or look at getting into trades. Now, the big thing is that I don't use Fibonacci as the be-all and end-all. I just use it for confluence with the other indicators and the other price action that we have discussed in the previous videos. So it's just something that I add to the repertoire as we go through the charts. And it's not like I don't just base all my trades on Fib levels. Right. I'm not going to be covering a cryptocurrency, guys. I'm going to be covering silver, just because it is a trade that I'm interested in getting into, and it's just quite nice so that I can show you, pretty much exactly how to draw the fibs and how to use them. Right. So the most important thing, guys, is getting your setup correct. So on TradingView, go down to this fib retracement. I'm just going to draw one out, guys. This just means nothing. And then go into the setup. So let's just move this across. Right. Oops. So on the style, guys, I switch off the trend line. I don't use it for anything. But I suppose I could use it so that you guys could see whether I'm drawing a retracement or whether I'm drawing an extension. And I'll tell you the difference about those now. And then what I like doing is, guys, 0, cool. The 23 doesn't bother me. The 38 I'm going to take off as well, doesn't really bother me. I just like using these. So the 0.5, the 0.6, and the 0.78, and then obviously 1. And then the extensions is the 1.6, the 2, the 3, and the 4. And then I've always got these, the 1.2, the 1.4, and then the 200. Okay, and then that's like literally the max that I go. Then I like having prices and percentage ticked. The percentage, just like an easy way so that I know that that's a 68.1. Just easier for me to read than 0.168. And then the prices, so that obviously once I've got a nice level, I don't have to like hover around that area so that I can get a price on the right hand side. I mean, it's literally just printed there for you. So that's how I set them up. And then what you guys just need to know about Fibonacci, it's a mathematical ratio. It works in a lot of other stuff, so traders have adopted it. And why I like using it is because I think a lot of traders and a lot of algos actually do use them. So when I've found an area of interest, I just throw on the fibs just so that I can double check, get some confidence and really start believing in the trade. Okay, so how does this relate to price action? Right, you guys need to understand price action, so you kind of need to know that you're in a bull market or whether you're in a bear market. Okay, and in a bull market, obviously we're not looking at trying to find entries. We're more trying to find exits, and in the bear market we're trying to find entries. Okay, you kind of like trying to catch the bottom or catch any of these pullbacks just to make some profit on the way down. Okay, and on the way up, obviously you want to get out of the trade before it pulls back, out of the trade, pull back, out of the trade, and you need to know kind of like where you're going to exit. Okay, so for the first one, and guys, also one thing that you guys need to know is that like fib levels, the way that I draw them and the way someone else draws them, it's totally dependent on the trader, and I just like trying to find confluence with the chart. So let's say this was the swing high. You always draw it from the swing high down to the swing low. Okay, so you'll pick the swing high down to the swing low. And like all of these areas, you'll see like price does come into contact with them, so there are areas of interest. But one thing that I like doing is when I don't see it actually hitting that top, you know, and it is difficult to know, especially if you were, you know, in this area and this price action obviously hasn't happened yet. It would be difficult to know exactly where the bottom is. But the one thing that you could have done to try to find that bottom, you would go from like this last swing low, okay, and you just draw it upside down, okay, and normally, you know, price will interact with one of the extensions, especially, you know, once it's really topped out, it'll then, you know, interact with one of the extensions, which is obviously anything higher than that 100. So the 127, the 141, the 161. Okay, and you guys will see. I mean, this was it went all the way back up to the top. Now you're trying to find an entry. Let me just get these out of the way so that you guys can see them a little bit better. So it did bounce off the 50, right? And then it didn't bounce at the 61. Immediately when price doesn't bounce off of the 61, that's when you kind of know that like you kind of headed for a bear market, right? And this is weeks, guys, so it's not like crypto where, you know, like this all just happens like in a couple of hours. So this is all weeks. I mean, this is really waiting it out. You know, you had maybe gotten into the trade super low, and you didn't take profits, bounced off the 50. That's immediately like the first sign, start taking profits. And then there's no support once it breaks through to the 61, and that's when you know, like, whew, we headed for a bear market. That's like always a big indicator, and you saw I did tweet about that on Bitcoin as well. And normally once it breaks through that 61, guys, it comes all the way back down to the 0 or like the 100. So it did interact here. You know, buyers were interested in this price. It rallied up, but it ran out of steam, and then it goes down. And then once it goes down, you can start looking at the extensions for areas to get into the trade. So I mean, that's how you would have gotten into this trade. But then once you're in the trade, you got to now try find exits. Right, so that's why you would then, you know, draw it the other way around. So this was the swing low, and like I say, I mean, you could draw it from this one to this one. I always like drawing it from, you know, the last bit of action. So I mean, this was an attempt at a swing high. It was the first lower high, so you know, alarm bells were ringing. But I mean, that's pretty much how I would have gotten into that trade. And then this is how I would have found ways to get out of the trade. So once I'm in, as price starts moving, I start looking for the price action, you know, a new high, a low, and then a higher high, a higher low, you know, and all of these higher highs, even another higher low. You know that, like, you know, we're in a bull market. There's nothing really that's telling you, you know, whoa, get out of it. And then as you can see, I mean, even here we did get another a lower high. We did then bounce off the 61, which is really good. So that normally shows you that, like, you know, people are still interested and the market's still going to be moving. But each time, you know, you kind of get through here, you can start adjusting your stop loss and moving it up. So once you've moved your stop up to this point, you've probably taken most of your initial investment back, and you just got like a little bit still in the game, and this is where you're now going to decide, like, which levels am I going to take profit. Now, I mean, I've never seen this, and I've never seen this until I started trading crypto, but it is, you know, here on silver as well. But where I like taking profits is from the 127 mark to the 200 mark. So I'd have you know, an exit over here, an exit over here, an exit over here, and an exit over here. And then that would pretty much be the end of the trade for me. I mean, this was just ridiculous what happened. Okay. And now price topped out here, and now we've got to kind of, you know, look at another place to get in. So that one you'd do from the swing low up to the high, like that. Okay. And now the interesting thing here is that this actually, I think, would probably be the one that I took off. Let's just take a look. 38. Okay, yeah, it was the 38. Now, price doesn't always bounce at the 38. But after a big explosive move, you know, normally it could bounce off of there again. So maybe it's good to keep the 38 in. Like I say, I always just get interested at the 50. But once price broke through the 61, you see there that it becomes like resistance again, and then price dwindles. So that 61.8 level on the way down normally like tells you, you know, kind of going back to the zero level. Now what's nice about silver here is that it hasn't really gone back down to that zero level. I think a lot of people are going to be waiting for it, but just from the volume over here, I mean, I can definitely see that we are going through a nice consolidation here. So I'm trying to find an entry here. So yeah, I mean, that's pretty much it. And just, you know, like with all other indicators, guys, make sure that if you're using a 4-hour, you know, you're not going to be trading it, you know, for more than 4 to 8 hours. If you're using the weekly, you will be trading it for, you know, at least a week. If you're using the daily, your trade will be open for a day. If you're using the 15-minute, just remember that you're probably going to be, you know, trading it only for 15 minutes. So yeah, I mean, that's pretty much it. You guys can hit me up in the classroom on the Discord. You guys can hit me up in the classroom on the Discord because the video will get posted there, and you guys can just, you know, discuss anything that you want or any questions that you've got. And then you guys can also catch me on Twitter. So yeah, I mean, go follow me if you guys if you guys want. And I hope that you guys enjoyed the video. Please like the video and subscribe and share. And yeah, I will tweet it. So if you guys don't mind giving it a retweet, that's pretty cool. And yeah, we'll see you for the next video soon. Catch you later.